In today's video, we're going to talk about the top 5 index funds available on Fidelity. Whether you're a new investor trying to fund your Roth IRA, or you're a long-term investor looking for a buy and hold approach, I'm sure one of these funds will be right for you. So let's go. Let's get right into it. Number 1, the Fidelity 500 Index Fund, also going by the ticker FXAIX. This is a very popular and straightforward approach for new investors. It is a fund that is only available on Fidelity, and it essentially tracks the S&P 500. The S&P 500 is an index fund that is comprised of the top 500 companies in the United States. And the way that companies are included in the S&P 500 is by market cap. The market cap can easily be calculated by taking the number of stocks available for that company, multiplied the average stock price of that company. The largest company right now is Apple. It has an approximate share price of $150, and when you multiply it by the total number of outstanding shares, its market cap is approximately $2.3 trillion. There are a total of 11 sectors in the S&P 500. Technology dominates at 28%, and the other 10 sectors make up the other 72%. In addition, each sector performs differently from year to year. Energy was the only sector that had a positive return in 2022. All other 10 sectors had a negative return in 2022. So if you were trying to pick and choose individual stocks in each sector, it would be very difficult for a new investor to make that decision. And that's why the S&P 500 is perfect. You're automatically diversified and you don't have to think about it. And in terms of a return, the S&P 500 has averaged approximately 8 to 10% over the last 10 to 15 years. And lastly, I have to mention expense ratios. When you talk about mutual funds or index funds, some private funds will cost you 2 to 3% per year just to manage that fund. And for FXAIX, the expense ratio is 0.015%. That means for every $10,000 you have invested, you're only going to be charged $1.50 per year. And so who is this fund best suited for? Ideally, it's for young investors with a lot of time. There may be some short-term volatility involved, and if you're close to retirement, you don't want to be caught in a drawdown when you're trying to make those withdrawals. Number 2, the Fidelity Total Market Index Fund, also known as FSKAX. This is a little bit broader than the Fidelity 500 fund. On the other hand, the Fidelity Total Market Fund will have more small and mid-cap stocks as well. It will most closely mimic the US Total Dow Jones Index. In terms of sectors, there are still 11 sectors, and technology does dominate at 23%, followed by healthcare at 15% and financial services at 14%. And in terms of a return, it's averaged approximately 8% over the course of its lifetime. The expense ratio is very similar, 0.015%. That means that for every $10,000 invested, you'll be spending $1.5 per year. So who is this fund best suited for? Similarly, it's a fund best suited for young investors with a lot of time on their hands. There will be some short-term volatility similar to the Fidelity 500, and you want to be careful of drawdowns. Number 3, the Fidelity US Bond Index Fund, also known as FSNAX. This fund is very different than the first 2 funds we've mentioned already. The primary purpose of this fund is to hedge risk. You can think about the first 2 funds as risk-on funds, and this is a risk-off fund. It's a highly diversified portfolio consisting of US Treasuries, corporate bonds, and mortgage-backed securities. And the largest holding is US Treasuries at 42%. US Treasuries are thought to have the highest credit rating, and so they're extremely safe investments. And just remember, bond prices are very closely associated with interest rates. So if interest rates are rising, the prices of current bonds will go down. And the reason for this is, as interest rates go up, new bonds will have higher interest rates, and thus old bonds will have to be sold at discounted prices. So who is this fund best suited for? It's essentially for people close to retirement who are looking to make withdrawals from their portfolio very soon. There's going to be less volatility associated with this fund, and that's why most people choose to go to bonds at the end of their career. Number 4, the Fidelity International Index Fund. So far, we've only talked about stocks that included the US markets. And if you're interested in capturing stocks in the global market as well, this is the perfect fund for that. In terms of sectors, there are 10 total sectors, with financials being the largest at 20%, consumer goods at 17%, and industrials at 15%. The rest of the breakdown can be seen here. And compared to the S&P 500, the sector allocation is very different. This is likely because the US economy is very different than the global economy. And as for an annual return, the average over the last 10 years has been approximately 5%. So who is this fund best suited for? Again, it's a growth allocated fund, so it's better for newer investors who have a lot of time on their hands. In addition, it's for people who are a little bit more speculative about the US market and want to have some international stocks as well. And number 5, the Fidelity Real Estate Index Fund, also known as FSNRX. This fund essentially invests in real estate, and more specifically REIT. REIT stands for Real Estate Investment Trust. And these are companies that typically own property and focus on income generation through real estate. And by investing in REITs, you also are a shareholder in these companies. And in terms of diversification, you have different types of buildings included in the fund. For example, the number 1 holding is infrastructure at 14.5%, number 3 is apartments at 9%, and single-family homes are the lowest at 2%. The expense ratio for this is 0.02%, which is also very low. Again, this is best suited for investors who want to diversify their portfolio to include real estate in their holdings. There you go. There are 5 index funds available at Fidelity, and my personal favorite is the S&P 500. Remember, this is not financial advice, and if you have any questions about your own personal finance, you should talk to a fiduciary before making any decisions. Anyways, if you thought this video was interesting, you might like this other video where I talk about the housing market in 2023. Peace, guys. See you next time.